Good evening. This is the Elliott Wave update for the S&P 500 for Monday, December 27th, 2021. Quite an interesting day today that the markets did come back from the Christmas break and just picked up pretty much right where they left off and just thrusting higher and higher. Today, though, was on particularly light volume, which surprised me a little bit, but nonetheless, the rally has picked up again. What that has done, as far as how I am counting this on an Elliott basis, has reverted back to what I shifted over to the alternate count, has now shifted back to the preferred count. So let me just go over that real quickly. So again, the S&P has been involved in putting in an ultimate high for the long-term sequences that have been advancing and just for the whole bull market in general. So where we are again, we're in the final fifth wave up. So it's the fifth wave of minor degree, fifth wave of intermediate degree, fifth wave of primary degree, fifth wave of cycle degree. And that will all finish a third wave of super cycle degree. Again, very long-term advancing markets, very long-term bull market. We've had some bear markets in between, but overall, they've just been corrections within an ongoing bull market. So now to update the current count back to the what was alternate, now preferred. We had left off that I was marking this as a B wave and now been looking for a C wave coming down. I put the 4 there, the 3 was actually, no, excuse me, the 3 was here, the 4 was here, that was the 5. So I was still declaring that as the orthodox high for the market. And this was an A wave, this was a B wave, and now looking for a C wave, which would then complete a intermediate degree A wave. That was now, even as the preferred count before, has been negated. So it's not even an alternate count right now. And so as an alternate, I don't really have one other than all the new highs that we're making now could be completing it and will start to drop in the beginning stages of that correction. Now, again, I just want to state, I know that I keep mentioning this longer, more involved, deeper corrective phase that the markets are getting ready to move into. That remains the case. And I continue to say, if they even take this to 4,900 or even to 5,000, it is not going to dismiss the probability or the potential for a longer term corrective play coming in. And so what I'm now doing is just, we're going day by day, and we're back to tracking that completion point. So instead of it already being in progress, now we're back to, we're waiting for it to begin. And I know the market keeps throwing us those curves, but when we get moves like this, and we get moves like this, that begin to suggest that we're going up and we're going to continue to go up, but then we fail and come down in 5, it does send you back to the drawing board to realize, well, what is all of that and how does that fit in to any count? And that's what ended up happening, that this was an A, this was a B, and this was the C. So we're back to the minor 4 being complete and actually ending in a failure. So what is that all going to look like? Exactly what the market just did. It came flying off of that level, 45.20. Came off of that level and broke back above the 200 on the 4-hour chart, plus on the hourly chart, and broke back above the 20 and the 50, or the 20 on the daily chart, and is just now thrusting itself higher with all the moving averages now turning up. So everything's back in alignment for the market to continue higher. But here we are sitting and doing this all against declines happening in other sectors. So it ends up being a finishing rally really only containing a handful of stocks from all the indexes. So it's not like it's a broad-based run for the brass ring and the market needs to just continue to fly higher because we're pulling back into a bullish, long-term bullish market. It's a finishing move. And I'm going to keep to say that. So whether everybody agrees or doesn't agree, that's not what's important. It's what the market is telling us right now. And the market right now is telling us we are continuing to go higher. And the intent is to go higher still. So off of this minor fourth wave, which finished last week on the 16th, actually before that, this would have, no, sorry, the 16th, I was wrong. This finished on the 20th. And so what we're now seeing is the beginning stages of the minor fifth wave, again to new highs. Well, we've already done that. And we've now done it in style today. The previous high was 4743.25. We've now reached 4784.25 and are finishing up the day, regular session, at 4782.25. Now there is some resistance, some at 4788 according to some, but I don't actually have that. Imagine if I kind of broke down some of these, I could probably come up with something in between. I don't have next resistance on the upside until 4813, so 4810 to 4815. I like to have a little zone of cushion around what the expectations might be. So that is where minor 5 would be 0.618 times the length of minor 3. That is the most common level right there. But I don't know if that's going to contain. It's only Monday. We have till Friday. And this Santa rally, this year-end positioning, this everything that's going on, whatever they want to twist around and put onto it, it is likely going to go through Friday's entire, it will go the entire week. That's the end of the year. That's the last of the trades. And then we come back at the start of the new year and boom, then we'll see what happens after that. But if the rally continues and gets itself above 4,800 and basically can start pushing its way towards 4,900, it really then can very likely continue. But don't forget that the NASDAQ was up 66 points today. If it goes up another 66 points tomorrow, it's taking us up into this zone. And if we continue that and continue 50 to 100 points until the end of the week, we're up here. So here's our resistance: 4812, 4854, 4892, 4900, simply because it's the number, but then 4993. That's the 100%. That's where minor 5 would be 100% the length of minor 3 at 4993. There's that magic 5,000 number again. Now, how high can this continue to go? If this minor fifth wave is going to extend, which right now we've got the third, the minor 3 is the extended wave, doesn't mean minor 5 can't extend in and of itself as well. That could start to push it well above that 100% mark. And then we have 5105, 5174. We have 5285, and then 5327. That, again, every time you want to think that, no, impossible, erase it. Everything is possible. If we're going to continue to push in the stocks that we're pushing on, these are expensive tech stocks: Google, Amazon, Apple, AMAT, AMD, etc. I can go down the list. Facebook up another $11 today. It's just a lot of positioning. Microsoft had a fabulous day. Microsoft says they're going to push it to 350. And again, guess what? Friday is another expiration. In fact, it's the last expiration of 2021. So I think a lot can happen leading up to that expiration point and how they want to finish the year with these stocks. And so I do expect a lot of positioning, a lot of posturing back and forth of where things are going to end up. But as it stands right now, unless there's someone for whatever reason, they want to show their short position is in better condition, and they're really going to start to lower the market or lower some particular components of these indexes, I don't see that the buyers are going to stop. So I do believe that we are going to get ourselves above 4,800. That's pretty much, should be happening pretty soon. And then we're going to start heading up towards that 618 number. Let me just put this back down a little bit. And I'm going to go up this way, 48.12, 48.13. So again, that zone 48.10 to 48.15. We'll give it $5, $5 zone. And then it jumps very quickly. Now, again, you're going to find some probably around 48.25, but here we are from here in no man's land. Market's never been this high before. What do you want to call resistance? What do you want to call support? You're going to have a more difficult time finding those points. So we rely on the Fibonacci relationships. And in this case, if this is a -5, then the relationship is to -3. That's why how I come up with these extensions. There are likely others that are running it from here down to here. That's going to give you a different set of extensions. But I don't question others' methodology, but mine involves the relationships between the waves. Elliott relationships between wave 5 and wave 3. Elliott relationships between a first wave and a third wave. Elliott relationships between a fourth wave and a third wave, et cetera, et cetera. These are things that we study, and these are things that we can put together that help guide us through what's going on. So I compare the fifth wave to the third wave because that's where I find the Fibonacci connections. That the most common retracement or the most common level for a fifth wave is when it's related to the third wave, that it is 0.618% of the length of that third wave. Again, that comes in at 48.12. We've built a zone around it, 48.10 to 15. Above that, we're getting additional numbers. Are they in play? Yes. Are they possible? Yes. Is 49.93 got a higher probability? At this point, it's got a minimum of 50% probability. And it'll build, of course, as the market just pushes itself higher. But right now, I'd say 50 to 60% probability that it'll get there by the end of the week. So we'll see. Again, we don't know for certain. We're just going on probabilities, we're going on potential, and we're going on an Elliott count and the Fibonacci extensions. So for tomorrow, I would think these little pullbacks, you can barely see them. And this is the 4-hour chart. So I'm going to go back over to the hourly chart so we can take a look at some of the internals on some of this stuff. These were not very strong. I mean, the biggest one we had was on Thursday. We had a nice pullback into the bell. Then we got Sunday going, and that was right here. And then again, a little bit of a pullback on Sunday night. But do you see any pullbacks? We didn't get any until the very end of the day. At 2 o'clock, we got a little bit of a pullback for an hour. Then they rallied into that bell. So I don't expect much change for tomorrow as we move into this positioning for the end of year. I think there will be play on both sides, but I think the majority is going to be to the buy side. Unless tomorrow is the day where all of the sellers who want to get out are positioning to the sell side, dumping out of certain stocks, et cetera, that of course could happen tomorrow and put a little bit more downside pressure on it. But at first place of any pullback, I'm going to be looking for the 4. And this is the hourly, looking for the hourly 4, the hourly 8, the hourly 20. A break below the 20 starts to swing the tone for the market to the downside. And so if that breaks, then you're looking for it to kind of likely drop back down to 47.12. Again, from where we are, it's a $70 drop. But in the context of this whole market, it's truly not that much of a pullback. Again, I'm not sure how I'm going to be counting this, but this obviously could be 1 and this could be 2. Before I had labeled it A, B, C, that this was 1 and then an ABC for 2, but that's not going to work. So I can't do that. So it's going to have to be likely this is 1, 2, and again, we're looking at minutes. I got 5 waves of minute degree. Then we're getting probably in that third. Again, 1, 2, 3, 4, possibly this is 3. So maybe we have minute 1 and 2 and 3 now complete. And again, this all fits. We're at new highs. So what we really would be looking for out of that would be a 4th wave. Now, if I'm going to do 4th wave, I can just put some Fibonacci out there, and they're going to be retracements. But it has to be, if that's going to be your label, if that's going to be my labeling, then this is 1, 2, 3, 4, 5. But this would be 1, this is 2. Then I go 1, 2, 3, 4, 5 of 3. So now if I want to show what that 4 is going to look like, I have to run it from there to there. And if I'm doing that, the minimum is going to bring it back to 47.03. So that's just the 4th wave. And again, there's the 4th wave of 1 lesser degree. And where are we? Back at the 50. So now, before what I said, it's like, is $70 really out of the picture for a drop in the market? No, not at all. A 4th wave, we would be expecting it to come that low. I mean, we're looking for it to possibly even get down to 47.03, back to 4,700. And it very realistically could do that and still be a 4th wave and still keep the rally alive. So in essence, to have this totally all complete, if I'm going to go 1, 2, 3, 4, and 5 as it's in its entirety, which I don't really think that I can. But if somebody does, then a wave 2, and then if this is only wave 1 of the minute 5 waves up, then we could have a much larger pullback. That's not how I'm looking at it. I truly am just saying minute 1, minute 2, minute 3. It was a beautiful, extended, very nice 3rd wave. And in all honesty, you just bought it, waited, sold it, bought it, waited, sold it. It was pretty awesome up day in terms of you just kind of buy and hold and get out later and make a lot of money. In any case, pullbacks, I believe, will be shallow, but this 4th wave, we do stand the possibility. And again, it's going to come down at ABC. So it should be 3 waves down, not just one sudden slice, but ABC. That could be sharp in some cases. In other words, it's just like a quick 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. It could be a quick zigzag. That would not be out of the question either. So again, we still have the Asian markets to come online. We've got Europe to come online, and but what happens in their area of the globe, what happens in their individual markets will be reflected back into ours as well. But I'd be looking for a pullback. Again, we may not get it. We might still have some additional upside. There's our next resistance, and we've got it going above as well. And once the pullback is in, I'm going to look for wave 5. And then again, being that we're up this high, I would likely consider these upper zones to complete the entire advancing sequence. That's where I'm going to leave it for right now. Trade using your moving averages, use the Fibonacci, use the Elliott. Next update will be Tuesday, the 28th.